Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 4th, 2025, and we're diving into Genesco's fiscal 2026 Q1 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Genesco has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Genesco reported net sales of $474 million for the first quarter of fiscal 2026, a 4% increase compared to last year. John, what are the key drivers behind this growth?
The growth was primarily driven by a 5% increase in comparable sales, with e-commerce sales up 7%. The Journeys Group led the charge with an 8% increase in comparable sales, showcasing strong consumer demand and effective sales strategies.
And how did this translate to their bottom line?
Genesco reported an adjusted EPS of 25 cents, which is slightly better than the forecasted 2.09 by analysts. This improvement is attributed to meaningful expense leverage and strategic cost management, despite the challenging retail environment.
Operational efficiencies and future outlook. John, Genesco has been focusing on operational efficiencies. Can you elaborate on their cost management strategies?
Absolutely. Genesco managed to leverage selling and administrative expenses by 170 basis points compared to last year. This was achieved through decreased occupancy costs and performance-based compensation expenses, alongside other cost-saving initiatives.
What about their future outlook?
Genesco has reiterated their full-year adjusted EPS guidance of $1.30 to $1.70, despite the current tariff impacts. They are confident in their strategic positioning and are making investments in product, stores, and marketing to drive growth.
Market reaction and strategic initiatives. How has the market reacted to Genesco's earnings report, and what strategic initiatives are they undertaking?
The market has responded positively to Genesco's better-than-expected results. They repurchased 604,531 shares for $12.6 million, which reflects their confidence in the company's future. Additionally, they have increased their inventory by 15% to meet the rising demand at Journeys.
And what about their debt?
Genesco's total debt has increased to $121 million from $59.4 million last year, primarily due to the inventory buildup. However, their strategic initiatives, including store optimization and share repurchases, indicate a proactive approach to managing their financials.
CFO insights. Let's discuss the insights from Genesco's leadership. What did the CEO and CFO have to say about the quarter?
Vaughn, the CEO, expressed satisfaction with the positive sales and profitability, highlighting the strategic plan's success in accelerating growth. Sandra Harris, the CFO, noted that the performance exceeded expectations and emphasized their mitigation strategies against tariff impacts.
How are they handling the tariff situation?
Genesco has diversified sourcing and mitigation actions in place, which positions them well to manage the current tariff impact. Their strong strategic positioning and adaptability give them confidence in navigating the current environment.
Key takeaways. In summary, Genesco has delivered a solid performance in the first quarter of fiscal 2026, with net sales up 4% and an adjusted EPS that beat expectations. Their strategic initiatives and cost management have positioned them well for future growth. John, any final thoughts?
Genesco's proactive approach in managing costs and optimizing their store portfolio is commendable. Their focus on e-commerce and strategic investments should continue to drive growth. Investors should keep an eye on how they navigate the tariff impacts moving forward.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Genesco's performance in the comments below.